So here it is. It is March 20th, 8:59 PST, which is 8:12 EST, correct? Reminder, I do not believe in trading on Fridays. I believe Fridays are meant for very, very beautiful long weekends or wave classes or volunteering, making this world a better place. It's drastically more rewarding to have enjoyable Friday versus have a painful, excruciating, jittery, and not so fun one. So let's recap what we accomplished so far this month in the trading room. I've completed, with Danny's help, 20 trades on S&P. Out of those 20 trades, 17 trades made it to the first target. A lot of times the first target is not decision point 1, it is decision point 2 or reversal zone if ratios telling us so. On S&P, the volatility had been higher. Trades had been taken on 5, 8, 13 and 21 range. All the stops and all the targets based on the time frame I take. Everything I do certainly for demonstration purposes only. Very, very important to remember that. So, if I'm taking trade on 5, my stop and target roughly 7. On 8, my stop and target roughly 10. On 21, it's 4 times as big as on 5. Price tells me where my stops and targets needs to be. Every single person in the room trades different lot size from 1 to 2 to 9, 7, 15 and 25 and 50. So scaling out is essential. 60% taken out at the first target. Oil, we have not getting as much volatility as we're getting on S&P. Again, all the trades taken during trading room hours. It's very unusual for us to see oil not to go to the third target less than on S&P. But there is not much I can do if oil gives very powerful opportunities pre-market. By the time we come to oil during trading room hours, it could be going very, very funky dance, which we will review in just a second. So again, 25 trades total so far as of March 20th, 22 trades positive, only -3, the same as S&P actually. And guess what? Those 3 are always counter trend or aggressive trades. On oil, I would never ever touch 5. Ever. Smaller the time frame, more slippery it is on oil. Very important to remember that. Bigger the time frame, less volatility you would see on oil. Let's recap what we're witnessing currently on S&P and what we're expecting the price to do. We're expecting S&P currently to take a major pause, a major snoozer boozer, because S&P reached reversal zone. Is that clear? S&P had been giving us very, very mixed signals. S&P had been giving very powerful buying opportunities pre-market. This is S&P hourly. And let me remind you the importance of the end of the minor trend, which is where S&P had been giving endless corrective formations and only super duper aggressive trades. That was FOMC day. So if you're sitting in the front of the screens and you are trading during corrective day, you don't understand what price is telling you. What price was screaming out loud is, take a nap, be like our Brisbane Puma, wise Neil, walk away from computer, come back when FOMC is released and enjoy the ride. Is that clear? How important this level is. If you know where this level is, you're monitoring for short. Yesterday I had only one super duper aggressive short trade that went to target. But spectacular rally picked up this steam after collapse, after FOMC release. And this rally is pretty tired, so be prepared to be bored and be prepared for very short day tomorrow. This bullish trend is finito caputo. Major snooze is here as this bullish rally came to reversal zone, which is exact same thing oil had done yesterday. This was where oil is currently. Sellers picked up this steam. So let's recap what we witnessed on oil. Excellent, marvelous case studies. In the course, you learned the importance of never, ever, ever acquiring a position when price comes to reversal zone. And here it is. This is what happens 99% of the time. First time oil came to reversal zone, it gave only a correction. And then it started reversing after trading room hours. And this is where we were yesterday on oil. Guess what? We got that lovely short. But 2.5 times supply of oil after that 60-tick collapse had ended because of this level. That's when we closed our trade. And here's this fascinating dance keeps happening between the levels. I must admit, oil, due to low liquidity, is full of surprises. I am only human. I expected this pullback to be drastically weaker. I do remember it's oil. Oil would stage surprises that you would not see on S&P, therefore reminding you. It requires an experienced trader to trade oil. We had done one lovely trade today on oil that made it to our targets. But generally, if I come to the markets and market is doing only this, we had drastically less volatility on oil this week than we had on S&P, which is very unusual. Out of 7 trades this week, out of 6 trades on S&P, 5 went to reversal zone. Out of 7 trades on oil, only 4 went to reversal zone. That reminds you, respect what the instrument is telling you and know what not to enter into. So what is oil and S&P telling us on daily and weekly? Let's take a look. Know your levels. That's why our bias remained long, close to this level. It would be very, very important day tomorrow on S&P. Or will the buyers pick up this steam today, or will oil revisit this level? Know where the end of the minor trend is. Everything drawn on March 2nd. So heads up. If oil will revisit decision point 1 and sellers will pick up this steam, next level to the downside is 95.04. If you know how price moves, you know all these levels far in advance. Here is oil weekly. All the levels drawn in 2012. Oil weekly is not that far off from decision point 1. So, that's the structure, that's the levels. If you know Alpha Wave Trader method, you look for buying opportunity at decision point 2. This was quite a powerful rally. That if you know how to trade Alpha Wave Trader method, you had opportunity to place lovely options on this time frame. S&P weekly, where are you? S&P. Oh no, be so careful. S&P is pointing down to pretty impressive, very critical level to find sellers tomorrow on weekly. What is S&P showing us on daily? It's showing us where the buyer stepped in from today. Once again reminding you why we're staying out of the market when price comes to reversal zone. That was very beautiful reversal on S&P daily. So tomorrow is extremely very critical day on S&P. As currently, we'll see. Will the sellers pick up this steam with vengeance? That's what daily chart. That's what weekly chart. And that's what hourly chart pointing up to. So if you know where these levels are, you know where to take profits off the table. And you know where to enter. All the stops and targets based on pure price and Fibonacci only. So adios everybody. Have a marvelous weekend. Those of you who sign up for the course, I look forward to seeing you in the wave class tomorrow.